All right, everyone, welcome back for another episode of Carnivore Trades. Today is Friday, September 30th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Doing this video really late tonight. It's actually in about a couple minutes. It will be Saturday, October 1st, 2022. So obviously, as I posted earlier, had some obligations right after the close today. Didn't want to rush out a video. Sometimes I'll rush out a video before the close if that happens. But end of quarter, I want to get time to look at the closing price because the closing price really matters, especially when we're hovering right around support. So I wanted to make sure I got an accurate review in for you guys as opposed to a timely one. And by the way, don't forget Sunday 12 p.m., the Cycles Review webinar will be held live. I will be holding that. So if you missed the first one, you're free to attend this one. If you haven't purchased either, or if you haven't purchased the course yet, you can do so now and you'll be added to that. Obviously, the recording will be posted on the website afterward. Really awesome stuff in that. I encourage everybody to sign up. Anyways, into the markets here. Very good puke into the close. Let's take a look at the intraday. Everybody's seen it by now. I'm sure many of you aren't going to see this until Saturday morning, at least this video here. But, you know, rally up today, kind of got faded there, and then we just kind of grinded lower all day. A little bear flag into the final hour, and then a huge puke. I mean, a good puke here on, let's take a look into 10-minute candle there. 20 million shares in just that one 10-minute candle there. On the spiders, the Qs with the volume surge as well, and really everything across the board here. Strangely enough, volatility not making a new high there. You see the VIX actually closed down 22 cents here on the day. My kind of analysis of what happened today is end of quarter window dressing, quarterly OPEX. That's why you got that big dump into the close here. This wasn't real panic. If it was, the VIX would be surging. UVXY would be making new highs. VIX would be making new highs. This to me was we need some, you know, we need to get these puts to expire in the money. And the 358, I saw some chatter about straddles and stuff going on. I think JP Morgan had one, something like that. It doesn't really matter. What matters is that this to me reeks of a quarterly OPEX move and window undressing. And again, it's really evident in the fact that volatility did not spike and the fact that they waited the last 10 minutes to really just put everything, they used all their firepower into it. If they were panic selling, they would have sold on the open. They wouldn't have let it. If there was panic selling and real conviction selling, they wouldn't have waited till the last 10 minutes. That's not how these big boys do it. They do it in the morning and they do it hard. So to me, it's more than now. Let's call a spade here. I mean, we closed below, you know, on the spiders here, we closed below that pivot low, new 52-week closing low and new 52-week lows for the year. Same thing on the Qs there. So new 52-week closing lows and lows as well on the Qs. And for the worst September in 20 years and the worst quarter since 2009. So everything about the tape's bearish. They barfed it into the close. I wonder how many people panic sold there in the last 10 minutes on that. Maybe some. Now, that all said, I'm still in the camp that the risk is to the upside in the near term. Very near term. Like, we're not talking about lows being in or anything like that. But, you know, I still think we're going to have a very good flush out here, but I don't think we're quite there yet. We're still too oversold. If you ask me, this wasn't enough. I mean, yeah, you can make a case as a kind of a bear flag here, but to me, it wasn't really enough. And let me just explain that. You just go to your more dominant. What's more dominant than the daily time frame? The weekly. All you did was go into double bottom, really. And you know, fair enough, you did close below on a weekly basis, but you're into that 200-week moving average in an oversold condition. I think that the risk right now is to the upside. We are very oversold. I have some minor cycle date that is today, so we could get a bounce Monday, maybe a gap down and a rally. I still think short term this market needs to bounce. I mean, look, we've been out the last, what's this, 5-6 days here. The last 6 days, 5 of them have been down. We've made new lower lows every single day except for the one green day. So they've been selling very hard ever since, you know, Friday, and this is all they've gotten to show for it really since, you know, 368 down to 357. They've been selling it hard, and I think we're just seeing seller exhaustion here. At least that's the way I see it. Another positive here for the market remains that the IWM has not made new lows. Not even a new nominal low. It doesn't even make a nominal low, let alone a closing low. So IWM's holding up. Again, Small cap is risk on. If this is seeing money flow, that's usually bullish. Now, the one caveat I will put to that is something that I've touched on many times on this channel. Some of these stocks that are so beaten down, we talked about biotech. Biotech's outperformed since June, but it's been so, if we look at the monthly, look at how much it's beaten down since then. So it's really like all the sellers are kind of out already. Anybody who wanted to sell has already sold. We look at ARK. This is kind of held up here. It's actually hasn't even tested the June or May lows, although it is bear flagging on the daily. Let's call a spade again, but it's not making new lows as opposed to the market. Big tech, the big companies, the biggest, the least risk, the biggest names are always ones the last to fall. Take a look at Apple today. This is a monumental dump the last 3 days. We're all the way back down into this. I think this goes back farther. Let's go back here on a weekly. Yeah, so this goes back to the 2020 highs. We're back down into that now, and we actually blew through the 70. I thought there was a pretty good area of support here on the daily for Apple. We blew through that 75% retrace, so pretty good sell there on Apple. Tesla, been waiting for this thing to sell off, and it finally has here. Finally seeing some weakness. This has now a failed weekly inside bar. So that has failed there. You still have this one, which you're still inside of. So that's kind of your positive right now. But you closed below this one here. And that is not a good look for Tesla. So we're starting to see, one thing you could say is that the IWM is holding up because it's already, the weakest, the small cap, the biggest risk names, the Carvanas of the world. They've already been beaten so far down. Shopify. Netflix has outperformed since the lows here, but this has had such a fall that, all the sellers are kind of, have already liquidated. So now we're seeing the last things to go, which is Apple. This was a safe haven name for really all of July, August, September. And now it's starting to see that sell-off. So just something to keep in mind there. Doesn't mean that we can't, again, I still think that we're oversold, and we could easily, have an engulfing reversal next week. We could gap down and rally back up. You got 1, 2, 3 bar sell into support. Still just a weekly double bottom to me until proven otherwise. And you also have the 50-month moving average rate. So that should get defended. Again, I am not bullish here. I'm not expecting the market to put in a low. That's anything other than a short-term move. But I think in the immediate near term, risk is to the upside at the very least. So we'll just kind of leave it at that. Let's get into some sectors. Semiconductors here down 1.48%. New 52-week lows, new closing lows. Again, lots of weakness there. Could make a case, though, you're starting to put in, get rid of this trend line. Well, you could make a case you're starting to put in some type of a falling wedge pattern there on the SMH, so that's something to keep an eye on. You could even draw it up to the highs there. So keep that on your radar as well. It doesn't mean it's going to, yeah, this one's probably better here. Okay, there we go. But yeah, keep that on your radar. It doesn't mean that it's going to have, necessarily a mega rally. In a bear market, a rising wedge or a falling wedge could play out, and then it could roll over. But again, just a sign that the sellers are exhausted here. Cloud software, IGV. No 52-week lows here today, but you do have a bearish flag pattern here on the daily. So again, some weakness here in cloud. No new 52-week lows here, but you still have a bear flag there building up on the daily time frame. So we'll keep an eye on that. Dow Transports also not making new lows on the week, but still took a good little fade there, just like everything else on the day, and that has been a weak chart leading to the downside. Interest rates via the 10-year. Daily candle doesn't really do it justice. It's got a huge bid from about 37.48 all the way up to 38 here intraday in the last 10 minutes there on the 10-year. So that took a really nice surge into the bond market close. The 30-year here as well had a nice pop there, and TLT took a pretty big hit towards the end of the day. So bonds, again, making a good shot here. Now the 2-year did not make new lows, although again, this has led to the downside. So, again, what can you say? This chart's getting beat up in the NASDAQ, and really the rest of the market has to catch up to this. So that's really the bottom line for right now. XHB still holding that 54 handle. So again, we bounced there earlier in the week, and got a nice little bid Wednesday, and then backtracked. This had a nice bounce Wednesday, but the rest of the market just dragged everything down, and this took hit as well, but it's still holding that 54 handle there for now, and the same thing with the ITB holding that 5150 area for the time being. VNQ getting a nice bounce here, but still an inside candle, not really a bottoming candle, at least not yet. This thing is way, way, way oversold here on the daily. I do expect this to get back up to around 85 at least in the near term. This actually might have bottomed too for a considerable, maybe a considerable bottom as well, but we need to see, some type of volume spike or some type of an engulfing reversal to really kind of confirm that. But this did hit that head and shoulders target I talked about yesterday. So, we'll see what we get here. If the rest of the market absolutely craps the bed, sometimes there's nothing you can do, but it is, to me now, getting extreme oversold, and it did hit that target. XLF, so financials, no new lows there on XLF. So we held double bottom on the weekly. We held that on a weekly close too. Let's take a look here. So that's 30.37. Also, we closed a penny below that, the low pivot for the year on the XLF. So technically that was a technical break there, but we did not take out the weekly low. So that's kind of your small positive there for the XLF. Broker dealers via XBD actually scratched out a small gain, so up just 1 whole basis point here on the day. Again, it's been a stronger sector, but what it's doing here is, you came up, you had this micro bull flag, and now you're bear flagging right in the same zone, so that's setting up for a move lower. So again, be careful with broker dealers here moving forward. Crude, again, nothing terrible. Nice pop on Wednesday, little inside pattern. This is actually outperformed, whereas everything else has completely faded that Wednesday pop for the most part. But it does need to get above that 20 moving average. That's sort of your first step. And then next would be that yellow trend line. As far as the weekly is concerned, you lost that kind of, you had a nice little power candle here on Wednesday, and that kind of got faded back down. But we still have a doji. And a lot of the time, the doji can be kind of the pause. You're in a downtrend for a long time, and the doji is the first time where there's equal buyers to sellers, right? Or at least sometimes that's the way it works. And then that can kind of precede the reversal. I don't know if that's necessarily happened. They did definitely defend that 100 MA. I would still prefer a little rollover into that 75 handle for me to accumulate some more. But if not, we'll see. It's got its work cut out for it. It's got to get above this 84, 85 area. And then, really that 50 moving average has been the real test, really ever since June 29th. So crude, nice little pop here, held the gains. It outperformed for the most part this week, but it doesn't mean it can't roll over a little bit from here. XLE, again, kind of a strong sector today, down just 8 cents there, or excuse me, 58 cents on the XLE. But, looking at the daily candle, just kind of just inside here, nothing really terrible. You're still below this pivot. You need to get a close above that before you can get some momentum, and then that could take you up to gap fill. XOP did get above that on Wednesday. So again, this could be, if this puts in some consolidation, you could put in a bullish pattern there for XOP or a move up. Same thing with OIH there, although you never got above that red bar high on a closing basis. Nat gas here. So again, you got to be careful with this. So what kind of pattern is this here starting to form? Got potentially a bear pennant here, or bear wedge, bear flag, whatever you want to call it, starting to build there on the nat gas daily. If this tightens up, this can push down, and it will get down to that 550 area. So be careful with nat gas. At this area, I would be a buyer, by the way. But for right now, nat gas kind of just holding this little flag pattern, and we'll continue to watch that moving forward. Dollar index, it was green on Friday, but not like ridiculously green, right? It, came up here, we pulled back. It wasn't green enough to really say like, oh, that was the reason why the market puked today. It was basically kind of just flattish to positive, really, all things considered. And that's, again, why I think a lot of this was end of quarter and a quarterly OPEX, window undressing, stuff like that. But dollar kind of hanging in there. And again, we're looking for that 110.75, 110.50 area for your first kind of test there on the daily chart of the DXY. Gold, excuse me, actually hanging in there okay. Down just 30 cents here on gold. And again, kind of acting perhaps as a little bit of a safe haven as, there's some uncertainty and the market was taking a dump. This falling wedge pattern I've been talking about on GDX has played out. And we got to close above that now. So we got to close so we can confirm that Monday. But the bottom line is that, I told you guys the other day that often these falling wedge patterns, you get these fake breakdowns to the already oversold side. and then you get a ripper in the opposite direction, and that has played out well. So gold miners getting a nice bounce and finishing green on the week and on Friday, where you look at the market, it was a barf fest pretty much this week. So gold miners actually outperforming. Excuse me. Silver also having a decent day here as well. I want to see a little bit more of a developed pattern here. And then we'll kind of evaluate that one moving forward. But I still like silver and platinum as well. I just need to see a little bit more of a pattern there on the daily to really kind of get a sense of what to do with it right now. And then copper, lastly, also negative on the day. Excuse me. But now you can make a case that is starting to kind of put in this sort of channel right here. So I'll be watching for that moving forward. Spot copper just kind of stuck in this range. Which way does it break? If you get down below this, then you can make new lows. If you get above that, you could have a possible ABC up. So we'll be watching for that moving forward. And then lastly, Bitcoin, relatively unchanged. Again, Bitcoin just kind of hanging in there. And this also kind of supports the theory of, the small caps, the risk on stuff is so oversold that a lot of the sellers are gone right now. So we'll see what we get here moving forward. It's kind of just stuck in this range. Which way does it break? If you lose this low here on Ether, that could give you another leg down. Same thing with Bitcoin there. You have a lot of resistance up there, up above this on this red bar and at this big trend line there on Bitcoin. But guess what? We're basically now trading into it. So it's got to either break out or break down at this point. So Bitcoin is at a crossroads here with this trend line. And we'll be watching that definitely next week, as that will certainly come into play probably early next week. Anyways, here, let's wrap up. So spiders, again, nice sell-off, impressive sell-off. Respect it. A spade is a spade. But we're into support. We're oversold, and I'm seeing evidence of seller exhaustion, at least in the short term. So I do think we could get a bounce here this next week. Maybe even if it's just 370, maybe it's 380. Max move would be like 390. That would be the ripper move. I don't think it gets up there. I think kind of settling more on like 375, 380 there. But again, we'll take it one day at a time, and nothing is really guaranteed. So definitely be careful in this market. Anyways, guys, going to wrap it up here. You guys take care. Come find me at carnivoretrades.com. I'll talk to you all next week.